I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's start with First Word News. President Trump at the White House today praised Rob Porter, the former aide who resigned in the wake of domestic abuse allegations.
We certainly wish him well. It's a obviously tough time for him. He did a very good job when he was in the White House, and we hope he has a wonderful career, and hopefully he will have a great career ahead of him.
The president says he was surprised by the allegations, but suggested giving Porter the benefit of the doubt. He also called the news, quote, very sad. Meantime, a White House spokesman tells Bloomberg that Chief of Staff John Kelly has not offered to resign. That's after an ABC News report that he'd offered to step down in the wake of the Rob Porter scandal. Kelly reportedly fought to keep Porter on the job despite those accusations of spousal abuse from Porter's two ex-wives. Porter resigned this week. A person familiar with the matter says that in a meeting with subordinates Friday, Kelly encouraged them to spread the word that he acted to remove Porter within 40 minutes of receiving evidence that the abuse allegations were credible. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton in New York. Bloomberg Technology is next.
I'm Corey Johnson in for Emily Chang, and this is Bloomberg Technology. Coming up, a volatile week in global equities markets comes to a close finally, and thank God, U.S. stocks gaining on the day. But some of the big tech names were the leaders on the downside and on the upside. We'll take a look. Plus, Uber settles. We're going to look at why the startup opted against a jury verdict in a high-stakes lawsuit against Waymo. And shipping with Amazon, the e-commerce giant stepping up its plans to create its own delivery business, leaving UPS and FedEx behind. All right, first to our lead. What a day on Wall Street. Stocks finishing higher, ultimately, even though it was down in the last hour, more than 1% across the board. Tech companies leading some of the gains. Anyone's guess what could happen on the close on Friday with so much volatility today. The Dow had a swing of more than 1,000 points today. Amazing to watch. Just followed a massive declines earlier this week. This is one of the biggest weekly losses of the year, and indeed going back quite a ways. Let's go to Bloomberg News stocks reporter Abigail Doolittle with a look. Abigail, we were doing that on Bloomberg Radio with Carol Master and I, and Charlie Pellet was just, we were all watching this crazy swing in the last hour where the market was down to way up.
It's unbelievable. This entire week is unbelievable, but today really mimicking, in a way, Tuesday. And relative to the week, Monday we, of course, had that big sell-off. And then on Tuesday, we had the market swinging between gains and losses and a rebound rally. Something very similar today because, of course, we had the big sell-off yesterday. So at one point today, near the open, the major averages up more than 1%, then down 2%, then up, down, and then at the end, like you said, it was hard to watch just to see. It was almost like watching tennis. What way will it go? But at the end of the day, the buyers did take it, some frenzied buying action there, buy the dip, if you will, or the FOMO, the fear of missing out. And, it's a nice way for investors to end a wild week. But interestingly, Corey, when you take a look at the technicals, a lot of these major averages look vulnerable to the downside, considering that they're below important moving averages, the 50 and the 100. Yeah. The S&P 500 hit the 200-day moving average. That tells you the sellers are lurking. So we had a big up finish on the day, but it'll be interesting to see how all of this plays out next week, of course.
I know how you love your technicals. Yeah, the bounce off the two, but that 200-day moving average on the S&P 500, there was a really decided bounce right when that happened.
There was a bounce there, Corey, but it's pretty interesting. I am going to show a chart that I've been showing all day of the S&P 500 relative to its 200-day moving average. This is the NASDAQ 100 relative to the 200-day moving average, and it suggests that more work to the downside is ahead for all of the major averages. And in fact, the Russell 2000 moving definitively below the 200-day moving average.
Abigail, what's that at the bottom?
Yeah, so this is pretty interesting. So this
MACD?
Well, no, it's actually the spread between the NASDAQ 100 and its 200-day moving average. So it goes all the way back to 2011. If you recall, we had that big rally out of QE2 in 2010 into 2011, overbought conditions. At that point, the NASDAQ 100 was about 18% above its 200-day moving average, very overbought. And then in August and September of 2011, we had that big correction, so dipping back down. We're in a similar situation here. Not so long ago, we were 16% above the 200-day moving average. Now getting closer to the 200-day moving average, about 4% above. But this suggests if we do anything similar to 2011 or other corrective time periods when it's overbought and then we drop back down, that there could be more ahead. Plus, Corey, Apple is a piece of this. They put up a somewhat disappointing quarter relative to missing those iPhone shipments for the December quarter. The outlook not great. And on the year, Corey, Apple right now on pace, if you can believe it, for its worst year since 2008. So that's also a piece of it that I think some investors are perhaps forgetting about. Some disappointing earnings reports there.
Joe Weisenthal, our colleague who hosts What'd You Miss, our Bloomberg Markets editor, tweeted today that it seems that the Dow is moving in 100-point increments, and these changes were so extreme here. But I think I really do want to see you do one with all hashtags and all emojis, just pure analysis using the tools of modern society. FOMO, for example, why not? Hashtag FOMO this.
Well, I will tell you, I did actually just send out a tweet not so long ago talking about how it was a wild week, ended at the highs, but that the markets got bite. And I put a little Jaws emoji because that's what it's like. We have these Jaws biting investors. Everybody thinks that there's a bottom and then the floor drops. And it seems like that could actually continue as we go on, especially the FANG trade has been derailed on the week. Those names all having their worst week since 2016. But, Corey, sort of a bright spot. Bitcoin not so long ago had been higher on the week. I think right now flat, but investors are a little bit less worried there about regulatory pressures. Plus that great quarter out of NVIDIA, and part of it being due to crypto. Yeah, driven by Bitcoin miners, an important use of Bitcoin chips, or of NVIDIA chips. Abigail, great stuff. We'll have to FOMO without you all weekend, but we'll get more of you come next week. Thank you very much. Thank you.
It. All right, let's bring in Dan Flax, our senior analyst with Neuberger Berman, covers the tech sector in New York. I've seen a couple market cycles. Dan, I don't know if you've got an emoji coach, but what's your emoji for what we saw this week of trading?
Well, a little bit of a lightning strike, I think, Corey, because clearly the markets had a very strong 2017. I think some of the volatility that we're seeing is perhaps concerns about inflation and rising interest rates. But stepping back, if you look at the fundamental drivers for many of the technology companies, the build out of cloud, the build out of next generation networks, we think the fundamental story remains very much on track. So if you look at the Microsoft results, they were very healthy, and we continue to like that name on a long-term basis. Cisco, which reports next week, we think the company is continuing to execute well on a transition to more software and services, and they have also executed very well in the security business. Another name we'd point to, which is Motorola Solutions, which is a leader in public safety, and they've done a very good job executing. And so we think there's a lot of opportunities in the market. While the volatility may well continue for the long term, we think there's some attractive names here.
Well, presumably, I guess, but I guess, you know, one of the things that I think people don't really understand when they start to think about a rising rate environment, you know, if you do discounted cash flow analysis and you're looking forward for a couple of years, what the treasury rate's going to be, that number goes higher, so companies have to earn more. And there's a fundamental and an appropriate, if you're doing the work, an appropriate revaluation down of even high growth names that we see in technology.
I think that's reasonable, but what I would point out is that if the revenue and the earnings and the cash flow are able to grow at outsized rates for these companies, then in our view, there's still opportunities for shares of those companies to outperform. So
okay, but why Motorola Solutions is growing at 5% top line year over year? That's not an outsized growth.
Well, we think the magic of Motorola Solutions has been an earnings or a margin expansion and an earnings story. So we think the earnings per share growth is actually more than 2x that rate. And the reason I mention a name like that is because we think there are pockets of opportunity in the market, and we think there are stories that have powerful drivers in the case of Motorola Solutions.
Yeah, and indeed, we've seen operating margins go from 20% to 27% over about a year. So that's the kind of move you want to see. Now, as you start to select these names, though, I guess let's imagine we have a market that's sort of bumping along some lows here instead of the rise that we've had for really, going back to 2009. What are the characteristics of the technology stocks you want to be invested in, or I should say the technology companies whose stocks you want to invest in?
So we're looking for companies that are able to build platforms. And the advantage of being a platform company is that you can attract people on both sides. So, for example, if you look at Amazon, which there's obviously a lot of debate about the growth rates and the future of that company, but ultimately they're bringing together buyers and sellers in their core business. They've also built out Amazon Web Services, which is the biggest cloud platform. And so companies that are able to build these digital assets have robust growth opportunities over multiple years. Now, we're still likely to have volatility in the stocks, and these companies need to execute, and competition is clearly fierce.
Right.
But if they're able to manage through different technology cycles, these companies have the ability to create a tremendous amount of value for all their stakeholders.
There's also a kind of a weird thing with this long bull market that we've seen. There are people on Wall Street, experienced people on Wall Street, who've never been around an environment of rising rates and are going to see things they've never seen before. And they're not young. They're just younger than the market, than this bull market.
I think that's a fair point. But looking at companies specifically and their fundamentals, in our view, even in an environment where rates are rising, if companies are able to develop their businesses and grow and take advantage of new opportunities, even in that environment, we think there's opportunity for them to continue to create value. So certainly a rising interest rate environment can have an impact, and I would suggest that perhaps if rates rise gradually, it's a little bit easier. If you have shocks to the system, certainly the market could react more negatively in the shorter term. But I think if one were to take a medium to long-term view, you want to try and identify companies that you think can create value, and that is what we try to do day in, day out.
Dan, I did pull up the operating margins in green for Motorola Solutions and the EBITDA margins, both up and to the right. So pointing out exactly what you were saying, that the story is getting with modest revenue growth, you got a business that's actually kicking more into the bottom line. And who doesn't want more on the bottom line? Which means, Dan Flax, you should go to your bosses and get a raise. You've done a fine job today, a fine job this week, and thank you for your help today. Dan Flax of Neuberger Berman. More for that bottom line, why not? All right, Walmart in talks to spend several billions of dollars to take a stake in the e-commerce leader in India called Flipkart. According to a person familiar with the matter, Walmart's stake could be as much as 20%. Part of the deal to boost Flipkart's valuation to as much as $20 billion US. Coming up, it was a trial that captivated Silicon Valley, or at least for a week, but it's over. Waymo and Uber comes to a surprising end. We'll bring you the details next. And if you like Bloomberg News, check us out on the radio. You can check out our radio show as well. Listen to it on the Bloomberg Radio app, Bloomberg.com in the U.S. on Sirius XM station 119. Check it out. This is Bloomberg. All right, the trial of the year for Silicon Valley is over already. It's only February. A surprising move. Uber agreed to pay Waymo $245 million worth of equity and cut to an end the trial of the self-driving technology that may have been stolen. Comes less than a week since the trial started and gives Alphabet-owned Waymo a 0.34% stake in Uber. Joining me right now, two people have been covering this trial closely, Joel Rosenblatt and Eric Newcomer. Guys, let's start with our legal guy. You cover a lot of trials. These trials usually settle early. They rarely make it to court, but you spend a lot of time in the courts. How unusual was it this started at all in court?
Very unusual. I mean, these cases almost always settle. It's surprising that this case took as long as it did to settle. I think it's a reflection of kind of the emotions behind it for each side. There's an emotional component to trade secret suits, and that was clearly fueling this.
What do you mean, emotion in what way?
in the sense that I think Google genuinely felt that
Larry
its IP
Page,
was
specifically,
stolen.
Alphabet's CEO here was angry about everything that went on. I mean, they saw all their former employees going over to their competitor, right?
There's that, and then there's this evidence, hard evidence, that there was some wrongdoing done by its former employee, Anthony Lewandowski. Real evidence of very bad behavior that Uber, in fact, condoned by hiring him away from Waymo.
Well, all right, but hiring away doesn't necessarily condone doing that. You know, anyone get hired away and doesn't mean you're condoning illegal behavior.
Right.
What was it like when Travis, kind of like the CEO, showed up into court and had a couple of days of testimony? It seemed like, to settle right after that, it seemed like this really hinged on what he said.
I think that's probably a bit overrated, though he did a very good job. He did a very good job. There's no denying that, and that certainly helped Uber's position and gain it some leverage. So
maybe Google thought and Waymo thought, we're gonna get Kalanick up there and he's gonna spill the beans and it's gonna look bad for him. We're to win the case based on his testimony.
I think actually that was not the case. I think the testimony that came after Kalanick was kind of where they were really trying to hit hard. I think they knew that they weren't going to get the goods out of Kalanick, and that was kind of their gamble. I think it didn't work out in the end, but I think ultimately Waymo got kind of what it wanted out of this lawsuit.
Look at this great video that our team captured in the wee hours. It sounds like it was a scene, though. It sounds like there were so many journalists, and it was like one of those parties that we get to go to, at least tech journalists all together.
Yeah, tons of reporters there, you know, all of the different people from the company. Tony West, Uber's chief legal officer, was
I thought you meant Batman. That's Adam West. Tony West, Uber.
Yeah, chief legal officer was there. So, yeah, it was, people coming in and out. But who we didn't see, of course, was Larry Page, Alphabet's CEO. They settled before he had to testify. So, make Travis squirm on the stand, but get out of it before their executive sort of has to go into the public.
This costs a lot of money. All right, so we talked about the $235 million in equity that Uber's got to dish out. They spent $680 million to acquire Lewandowski's company. And they probably spent our Bloomberg Intelligence legal analyst was on the radio with me on Bloomberg Markets radio show. He said it probably cost them $50 million just to go to trial.
Well, I mean, Eric can speak to the $680 million, which turned out to not be that at all. I think the real cost here for Uber was the public relations disaster. This was just a steady drip of bad information coming out about Uber and what it did to get the engineer at the center of the lawsuit. So that was the real price exacted, I think, for Waymo. It paid rich dividends over the course of a year in its public relations kind of attack.
Well, let's talk the financials very briefly. Okay, the acquisition of Auto in the first place ends up being $600 million in equity earnouts. And a lot of those earnouts have not occurred.
Because he got
So we're talking about like some of the payments have only been like maybe $100,000 we're talking about. So I'd take that number with a huge amount of skepticism. Okay. Then we talk about this actual deal that happened today. The important number is 0.34%.
Right.
They're taking less than 1% of Uber.
Of one of the most valuable startups ever.
And as we saw, SoftBank valued Uber at $54 billion blended. This $72 billion that they're using to come up with the 245.
Oh, is that what they're using?
Yes,
exactly.
That's crazy. So,
and they have to do that because otherwise it might, we don't know, but we think it might trigger an issuance of new shares to late investors. So they're going to continue to use this phony valuation of 72.
This comes from Waymo, but, so what the 0.34% is actually worth, you can do the math.
Less. It's not worth $235 million.
245, yeah.
That's really
and we put it in our news story. We did it. It's sort of like somewhere between 150 million and like 250 million. It's still a ton of money, but
wait. So let me try to explain it a little more clearly. For those of you keeping the score at home, or those of you who are alone, there was a valuation that SoftBank agreed to pay for a little bit of their investment that was equal to earlier valuations of Uber.
Right.
It is possible that those people who paid those higher valuations, $72 billion valuation, got a promise that if there was ever an official lower valuation by the company, they would be issued more shares, which would have diluted everyone else. Uber doesn't want to trigger that, so they continue to use this ridiculous number of 72 million, even though they let SoftBank come in and buy out a lot of shares at a much lower valuation.
It's also good for Waymo here because they get to have a headline number that they won $245 million.
To the extent that that's good for them. They could get good publicity. Did you get a sense of the trial was like that something changed this week, that it was going in a different direction, it was favoring a result for someone?
It wasn't going as well for Waymo as I think Waymo had hoped, and it was going better for Uber than I think it thought it would be the case. So when we got through most of Waymo's case, so I think that they had kind of sized up, what they had. Right. In terms of the settlement and the money, I think the money didn't matter. I've kind of said all along the money didn't matter. What we've learned is that Uber has agreed to not use the trade secrets at issue, that they're going to do a design around in the LiDAR, in the hardware, and they've also agreed to not use Waymo's software, which Waymo had tried to get into the case and failed. And so that's it's kind of like underneath the surface, numbers aside. Right. I think that Waymo got in real terms, what it wanted out of the settlement.
And can I just make one point? Just to zoom out, I think we lose track of how much Waymo got out of this. Uber's CEO has changed. Right. In a letter, the demands made against Travis, one of the big problems was Waymo. And Anthony Lewandowski, the man that got everybody angry, was fired.
Let me say two things about it. Let me give myself the last word.
Yeah, go for it.
I'm sitting in this chair today. Two things. A friend of mine worked with Lewandowski and said this guy was so impressive that he could walk into a room and listen to 8 different arguments and sort of put them into 2 ideas and have people really start to figure things out, and that he was a truly impressive guy. And so I say he might still have a future in Silicon Valley, which you wouldn't think. And the other thing I'll say is that everyone in the Valley had such interest in this thing, because the idea of stealing ideas and moving with documents from one company to the next. I couldn't believe how many parents at lacrosse games or people at cocktail parties who weren't in the industry at all would bring this stuff up. It was fascinating stuff. And we're lucky to have your coverage of it. Thank you very much, both of you, Joe Rosenblatt and Eric Newcomer, both of Bloomberg News, and both covering that great but brief trial for us. Thanks, guys. All right, well, coming up, Alibaba pledged it will create 1 million jobs in the U.S., but will they? We're going to head to the Olympic Village in Pyeongchang to hear about Alibaba's President Michael Evans and the company's impact on that promise so far. This is Bloomberg. Alibaba's President Michael Evans caught up with Bloomberg's Stephen Engel at the 2018 Winter Olympics in Pyeongchang. Evans says the company is on its way to creating 1 million jobs in the United States by 2021.
In China, we created 30 million jobs over 18 years for the 11 million SMEs that are sitting on our platform. It's too early to quantify exactly how many we've created, but we know based on the volume of business we're doing that jobs are being created.
And he talked volatility in the global equities market. Take a listen.
I'm not particularly concerned about short-term volatility. I think the fundamentals around the world, in terms of GDP growth, the way that markets have responded on the back of the financial crisis, I think, while not everywhere is looking good, most of the world looks pretty good.
All right, coming up, Amazon continues its moves towards world domination. We're going to talk about it during package delivery and leaving UPS and FedEx in their wake. And Bloomberg Technology live streaming on Twitter right now. Check us out at Technology. That's the hashtag there, the handle. Every weekday, 5 o'clock on the East Coast, 2 o'clock here on the West Coast. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with First Word News. The budget bill President Trump signed Friday includes huge spending increases for the military. The Pentagon will get $94 billion more this budget year than 2017, the biggest year-over-year windfall since the budget soared when the nation was fighting the wars in Afghanistan and Iraq and expanding national defense after the 9/11 attacks. In total, the $700 billion budget provides more in defense spending than China and Russia. The number 2 official at the Justice Department plans to step down after just 9 months on the job. That's according to the New York Times, which says Rachel Brand is leaving for a general counsel position in the private sector. Brand is next in line of succession behind Deputy Attorney General Rod Rosenstein, who's overseeing Robert Mueller's special inquiry. Citing deep divisions, European Union chief Brexit negotiator Michel Barnier warned Friday that talks over a transition period could fail. Separate discussions are also being held concerning the border with Ireland.
First, solving the issues on the island of Ireland through the future relationship. And this future relationship would need to avoid hard border and protect North-South cooperation and the Good Friday Agreement.
Vice President Pence attended the opening ceremony of the 2018 Winter Olympics in Pyeongchang, South Korea Friday, sitting in the VIP box just in front of Kim Yo-young, the sister of North Korean leader Kim Jong-un. Pence did not speak to the North Koreans. He says the games should not be used as an opening for substantive talks until the North's nuclear program is up for negotiations. The U.S. Olympic Committee used a pre-opening ceremony news conference in Pyeongchang to apologize once again to athletes abused by disgraced Dr. Larry Nassar.
To the women, both those who chose to testify and those who did not, who have demonstrated tremendous bravery, poise, and strength in the most difficult circumstances imaginable, let me say this. The Olympic system failed you, and we are so incredibly sorry.
The USOC also failed to send a representative to listen to the testimony at Nassar's first sentencing hearing for federal child pornography crimes. More than 150 women and girls testified in detail about how they were abused. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. In New York, I'm Mark Crumpton. This is Bloomberg.
Bloomberg Technology, I'm Corey Johnson. Well, first it was groceries, then it was healthcare. Now Amazon may be looking to get into shipping. That's right, the Wall Street Journal reporting that Amazon expects to roll out a service in Los Angeles in the coming weeks with third-party merchants. Bloomberg's first reported Amazon was testing it out delivery service last fall. For more, let's bring in Bloomberg Technology reporter Spencer Soper in Seattle, who covers Amazon for us, and Bloomberg Intelligence Jitendra Rawal here with me in San Francisco. Spencer, let me start with you. What is the news here? How does this differ from what we reported back in the fall?
Well, the news is that it's just, ramping up further, and they're getting closer to executing. Amazon looking at making deliveries on behalf of its merchants, and a big thing here is Amazon making deliveries from the warehouses owned by their merchants, not just their own warehouses, which they have been experimenting with this service Amazon Flex, which is kind of like an Uber app type thing where people with some spare time in their own vehicle can make deliveries for Amazon. The big thing here is Amazon making deliveries from other warehouses other than their own.
So is this last mile delivery we're talking about here, or is this the stuff that we were just showing one of the Amazon rented planes, what they've contracted, 34 planes, I think. Is this last mile or is it first mile?
Yeah, last mile, and that's the big thing. Is like last mile is the most visible, right? Everyone's used to seeing the mail truck come through your neighborhood, seeing the big brown UPS truck through your neighborhood. Amazon is already heavily into logistics. It's got warehouses all over the country. It does third-party logistics services for its merchants already, has been for years. This is just the most visible form of logistics, which is the last mile, the to-your-doorstep delivery.
Jitendra, you have this really fantastic report from Bloomberg Intelligence that talked about what Amazon might look like in 2020. And one of the predictions you had, we were talking, you and I were, I can't remember if we talked about it in the air or just talking amongst ourselves, as we tend to do, about the global need for shipping in Amazon is greater than anyone can handle. They couldn't buy a FedEx and have everything they need. They couldn't buy a UPS and have whatever they need because nothing is big enough.
Yeah, so if you look at their shipping cost and, sort of our projection through 2025, it should be upwards of $60 billion.
$60 billion.
By 2025, if they hit their $1 trillion gross revenue mark, which is very feasible. Now, what that entails is the investments in logistics have to go up to scale the business. But if you look at this news report, what this is geared towards...
So let's give some context here. UPS had $102 billion in revenue in the last year. So they would be 2/3 of that, basically.
So exactly. I mean, like, you have to think about how much of the shipping cost basically is increasing and how much they need to scale that to scale the revenues. So it's inevitable. But if you look at this news story, what's interesting is because third-party services account for more than half of Amazon's gross sales, this is the missing piece. When you sign up for an FBA program to let Amazon handle all your e-commerce need, shipping is the only element that they don't have right now. They rely on UPS.
So
FedEx,
Amazon
USPS.
will list your product, Amazon will sell the product, Amazon will handle the credit card transaction, Amazon will arrange for someone else to ship it.
And the warehousing as well.
Right.
So now this sort of connects the whole equation. So this becomes a one-stop solution. And because third-party services is the bigger part of the revenue engine, looking forward, this sort of makes it easier to attract more third-party services.
Spencer, it seems to me that Amazon Web Services is a model here because Web Services started with Amazon's need for sort of peak capacity of computing that they didn't really need most of the year. They thought, well, why not just sell it to other people and rent it to other people, and all of a sudden Web Services is born and it becomes their second largest business. You can sort of see how they might look at shipping the same way. They need to have a lot of planes in December. They might not need so many in June, so they can rent out that extra capacity in June.
Yeah, they definitely need the capacity. Another thing to consider here, which makes Amazon very uncomfortable, is that there's a shipping duopoly. It's UPS and FedEx, and if they are too dependent on them, those companies have tremendous pricing power over Amazon. And so the best defense against that is to vertically integrate, is to try to do that on your own. And a big tie-in with this too is their grocery push. The big thing that groceries bring to the table is frequency. It's something people buy regularly. And so if Amazon can just establish this volume, delivery volume around grocery, even if they're not making money, that's a good way for them to load extra things into the basket, extra things onto those trucks that are delivering groceries that are higher margin.
Jitendra, do you think that this is going to be something that will end up being global for them?
Actually, internationally, they are stronger in handling their own shipping. If you look at India, for example, I think it'll be big in supporting the FBA program and third-party services growth more than it'll be as a standalone service. For the whole equation to make money profitably, it'll be very hard for them to reach scale like UPS and FedEx to pull it off profitably. But if they marry it with FBA services, marry it with third-party merchants. Fulfillment by Amazon services, married by the third-party sellers that are selling on Amazon and they collect seller fees, then the equation starts making more sense. So I think it'll be So
for the third-party stuff that they're shipping, they won't just do shipping to Amazon customers. They'll do shipping to wherever those third parties want to sell their stuff.
Yes.
Interesting stuff. Jitendra, always a pleasure to talk to you on TV, on the radio, or in real life.
Likewise.
We'll do some more of that. And Spencer Soper, I like it when you make Amazon uncomfortable. I know you like it too, so keep doing it. Thank you very much. All right, sticking with Amazon, the company has tapped Jennifer Salk to run in-house film and studio division. Salk's a longtime TV executive. She comes from NBC with hits like This Is Us and The Blacklist. Amazon spent months searching for a media executive who could overhaul the programming strategy at the studio after Roy Price, who helped build that business, a longtime Amazon executive, resigned amid sexual accusations, I should say, of sexual harassment. All right, coming up, we're going to talk to a man who has some grandiose plans about how to keep the planet from overheating. Some really cool and crazy ideas. And this week on Bloomberg Television, we're going to bring you the best interviews from the week, including a conversation with PayPal co-founder Max Levchin and CEO of a fintech company now called Affirm. Tune in Saturday for the best of Bloomberg Technology. This is Bloomberg. YouTube has suspended all ads from the controversial online celebrity Logan Paul's channel for, quote, broadly damaging videos. This has been quite a big story. Logan, first suspended for posting a video of himself appearing to be near a body hanging from a tree in Japan. There's been a subsequent kerfuffle about this. Paul's one of the highest profile and highest paid YouTube stars, and certainly the most high profile to be sanctioned thus far. His income stream is expected to be millions and millions of dollars. All right, by now you're probably familiar with the dangers of global warming. Duh, who isn't? Polar bears certainly are, stranded on melting icebergs, billowing carbon emissions polluting the sky, increasingly frequent superstorms, and more. But what can be done about it all? Well, there's a group of scientists out there with some pretty nutty ideas to cool the Earth. At least they sound nutty, like massive sun ray mirrors seeding the upper atmosphere with sulfate aerosols to create a shield around the Earth and more. It's called geoengineering. And my next guest is leading the charge to get more resources into this field. Antonio Buzzolacchi is the president of the University Corporation for Atmospheric Research, a consortium of over 100 universities studying atmospheric-related sciences. Professor Buzzolacchi, am I pronouncing that correctly, I hope?
That's correct, Corey. Good afternoon.
Amazing. It's one in a row for me. So talk to me about what can be done. Unfortunately, we have to address the notion of these climate change deniers out there. But they surely would love this. Yeah, don't worry about climate change. Buzzolacchi's on it.
Well, it's not such a crazy idea after all, because there are natural episodes in the climate system, within the Earth system, that have demonstrated this is possible. For example, in 1991, Mount Pinatubo, a volcano in the Philippines, injected something on the order of 17 megatons of sulfate aerosols into the atmosphere. And these small particles, they actually filter the solar radiation from reaching the Earth, and it actually cooled the global temperature of the planet by about 0.6 degrees Celsius over a span of 12 to 15 months. So this one aspect of geoengineering is to do this deliberately if we are serious about trying to maintain our global warming beneath an overall threshold of 2 degrees warming.
So how are you going to ignite a volcano?
So it's a great question. It would be done artificially by a series of rocket launches, airplane deployments at different latitudes, at different frequencies, in order to decrease the incoming shortwave radiation. That's one technique. Another technique would be to fertilize the ocean with iron to cause massive blooms of phytoplankton or algae to draw down, take carbon out of the atmosphere and sequester into the ocean. So theoretically, it's possible, but there are huge ethical and governance issues about this sort of deliberate manipulation of the Earth's climate.
Give me an ethical issue.
Well, what happens, for example, if a rogue nation unilaterally decides to do geoengineering and changes the climate for that one country's best interest? And then what are the downstream unintended consequences of global engineering? How would it change global precipitation patterns and changes of droughts and floods downstream from this one rogue nation? There's a lot of this area where we don't know what we don't know.
And I guess, yeah, it strikes me that the Colin Powell rule, what he called the Pottery Barn rule, you break it, you own it. Once you're the one tampering with the weather, you're the one responsible for every flood, for every sunken beach, for every whatever, every hurricane.
And in that regard, there's a lot of attribution issues. How do you know if there's a naturally occurring hurricane? Well, was it caused by geoengineering or not? So this is an issue of Pandora's box, and it's not something we're necessarily advocating for, but we definitely need much more research so we have a much better understanding of what are these unintended consequences.
Well, and what's the chaos theory notion that when a butterfly flaps its wings somewhere, the implication is a typhoon somewhere else? Surely that would come into place here. But it also seems, you talked about taking it seriously, it really seems that it's been very difficult, if not impossible, to come up with global climate agreements that for example, the U.S. pulling out of the most recent Paris Accords, and to taking this really seriously and doing the other things that would reduce the carbon imprint and keep these things from happening in the destruction of our systems.
That's an excellent point. I mean, it's taken us 20 years to get to the point of the Paris Accords, and now we're talking about the potential.
We're not even there yet. But we're not even there yet. I mean, it's amazing.
Absolutely. And so, in my opinion, yes, we need to do the research, but in order to get to this point of actually all the nations of the world coming to agree on geoengineering, I think it really would take a worldwide cataclysmic climate disaster to get all the nations of the world to agree in short order to do something like this.
Well, and by the time that happens, it may be too late.
So that's all the more reason why we need to be doing the research now so that we do know what it takes and what those unintended consequences might be.
Cool, weird, wonderful stuff. Dr. Antonio Buzzolacchi, thank you very much. We appreciate it. Buzzolacchi is the president for the University Corporation for Atmospheric Research. We appreciate his time. All right, coming up, Facebook wants to make it easier for you to tell someone you don't like their comments. So what does Reddit have to do with it? We're going to find out next. This is Bloomberg.
We wanted to make something that's cutting edge and is going to make the world sit up and take notice.
It's diversified, it's a true ecosystem.
You're really changing industries and you're changing processes. You need those skills, you need that information.
Well, the B Capital Group has closed its first venture round. It's a VC firm. It's raised $360 million to invest in healthcare, fintech, and other sectors. B Capital is interesting to us for many reasons, not least of which because it's backed by Eduardo Saverin, who founded a little company known as Facebook. The Brazilian-born billionaire was reinvented himself as a VC. Since relocating to Singapore in 2009, he went there to avoid paying taxes on his massive Facebook gains. And B Capital has got a partnership with Boston Consulting. All right, so you're tired of having to type out to replying to a Facebook comment you just don't like? Well, it looks like Facebook has heard your complaints. Social media giants testing a button that would let you downvote other people's comments, similar to what you already see in Reddit. On Reddit, here to tell us more about this, Sarah Fryer covers Facebook for Bloomberg. So what's up with this? Reddit an inspiration here?
So it's not a dislike button. It's not a thumbs down. It's actually, when you see a comment to the right of the like and reply options, there's a downvote option. And so far, this is just a small test in the US. Right. Facebook is not using it to rank comments, and it's only happening on public posts. So those are posts from public figures or media organizations. This is very interesting to me because in 2016, I wrote this story about how Facebook was rethinking the like button and never wanted to consider having a dislike button because that would sow too much negativity on the site. They didn't want people to go to Facebook and feel upset.
It's really interesting, this, because it's on a lot of counts. So let's start with one. They flat out ripped off the idea of Snapchat with their Instagram stories and then Facebook stories. Says me and says everyone else.
I think they say that too.
And it's been a fantastic success, and you can see it really limited the growth of Snapchat at a very critical period. Now this is taking something that Reddit that's so very popular, and it really is about community. And one could look at Reddit and say, how come Facebook didn't own what Reddit's doing so successfully? Do they have that notion now where they're going to take the best ideas from everywhere the way that Apple used to?
Well, I think with this downvoting, it's more in response, I would say, to a lot of the concern about the content on Facebook. And Facebook's looking for ways to get signals from their users about whether or not they feel like what they're seeing is of quality.
Is it a fake news concern, or is it a harassment, hate speech concern?
In the comments, I think it's a lot more the trolls who come and write on anything, just sort of things that completely cause people to get angry, and then you have fights in the comments. A lot of people have talked to me, when I did that story a few weeks ago about people who are spending less time on Facebook. One of the big reasons is just the arguments that happen there between people of different sides of the aisle in the comments, and this would sort of take those comments that are maybe lower quality, the name calling and the harassment, and give Facebook a reason to see.
It's interesting, and we talked about this before, but I did some financial analysis at the end of the quarter, as I always do at Facebook, and it's really striking to watch. We saw user growth the least impressive ever from Facebook, which is to say it's still a huge audience and impressive, but least impressive ever, I would say. And yet, we saw revenue per user was up quite a bit, which is to say marketers, even though the platform's not growing as fast as it once did, marketers are paying a lot more to be in front of those users. And so it was Mark Zuckerberg's notion of people can use Facebook less. Maybe they shouldn't be totally addicted to it. Maybe they won't. They'll see more feeds from their friends, and his notion of how the news feed's going to change. This sounds like it goes along with that.
Absolutely. I think Facebook really wants this year to focus on quality, not quantity. Now, I think a lot of the concern with a dislike, downvote button on comments is that it would be easily gamed. It'd be something that, say, if you were a troll looking to if you comment on my post and I just don't like you, if I just don't like you, I downvote you.
This is a rough show.
It's a rough show, Corey,
so hard
but
to be me. Tell the truth. If we tell the truth here, why not? No, you're right. It sounds like that would really change the tenor of the discourse. Mm-hmm. But it also seems that Facebook's been reticent to do that in the past.
They're trying everything right now to try to figure out how to make Facebook a place where people have meaningful conversations and time well spent. Those are the two buzzword phrases of the year. You're going to hear it a lot. It's going to be very unclear to us for a while exactly how they'll get there.
Sarah Farber, great stuff. Thank you very much. I like you even if you don't like me. Fine. That's just how I feel. No downvotes for you. All right, that does it for this edition of Bloomberg Technology. This Monday, former Twitter CEO Dick Costolo will join the show. And a reminder that we're live streaming on Twitter right now. Check us out at Technology weekdays, 5 o'clock on the East Coast, 2 o'clock on the West Coast. That's it for now. This is Bloomberg. Everyone have a great weekend.